third day in a row for a negative dollar to the bottom.
So bad, man. Looks so bad for the economy right now. Yeah, Dixie's on meth. She's been going crazy. Alright, we'll give about 2 more minutes so we can get this going. Alright, 1 more minute. I know. Some seconds charts, man. They're getting to me. The seconds charts getting to me.
Suavemente.
That boy. Long way.
You're.
Let's go with you, man. How you been?
Oh, man. Been doing great, brother. Can't complain. Just another day in the life of your average crypto trader.
Yes, sir.
Feel me?
He fumbled the bag, bro. He closed the ETH short.
Yeah.
Oh, no.
It was the Bitcoin, but yeah. I could have doubled my profit. It's okay. Woulda, coulda, shoulda games. I don't play those.
Yes, sir. Get what you
I'll
can,
move
get on,
on.
get out.
We knew.
It's that spy activity was making me kind of sus on the shorts.
Oh, yeah. This chop's been mean, man. This range we've been in has been mean. Take a look at Spy, too. But yeah, alright, now that everybody's in here, we could get this started. Welcome back to another stream. Gonna be a little bit more educational, like I said before, in the lessons channel when I posted it. Reasoning for this is going to be the CPI data that comes out. Usually I wait for some type of volatility, right, that liquidity rate, and then that introduction of either demand or supply to look to take these scenarios. Now CPI leading into these can hold a lot of bias one side, right, based off of what people believe either economically or what they see on the charts, or it can be a combination of both, right? So a lot of the times we will see that volatility ensue following with a liquidity rate, and then we get our move, right, what we want to see, that behavior that we're looking for. We're going to take a look at Bitcoin and ETH, do a little bit of TA on that, and then get ready for tomorrow as far as that goes. And then we are going to take a look at some gold, understand introductions of supply and demand. We're going to take a route from a 4-hour to a 1-minute trade on gold, and show you guys exactly how we can get to that refinement to the 1 minute instead of looking at a higher time frame zone, automatically going into that zone, finding the 1 minute institutional candle, the last buy before sell candle or sell before buy candle, and automatically taking that. We can get confused and get into these situations to where we don't understand why one zone is hitting or why a different zone is hitting, and I'm going to get into that in a second. But first, we're just going to do some TA on ETH and Bitcoin. Obviously, we are still in our range that we have been talking about in pretty much all of our streams since we have been in this range. We have been talking about these lows that we formed at this demand zone, all of that liquidity, right, that came from this move right here. When we immediately had that mitigation of demand, right, we needed that impulsive move after a liquidity rate. Did we really get that? Not really. We did break structure to the upside, right, create demand, and that is what caused that move into higher parts of the range, right, with supply taking out previous shorts, and then from that we can see our move back into the range, right, following the liquidity back and forth between the range to understand which side is on which side, right, and so we can get a better understanding. Now, Personally, what I believe is that almost everybody is short biased, right? And yes, higher time frame structure is telling us this, right? And from a standpoint, if we are playing structure, right, playing the chart, playing the movement, we need to understand new areas of supply that were created from downside breaks of structure, right, to look to possibly take some trades. But overall, we do understand a lower high must create. And now this is not going to be just the bias based off of how we're going to trade. We need to get our market structure following confirmations. But looking at ETH, right, doing body closures on these candles, understanding where we sponsored the move that broke structure or started to show some type of structure break out of a higher time frame range, right? That move that sponsored that came from this move right here, right? We had a liquidity rate to the downside, higher time frame demand mitigation, or liquidity rate to the downside over here. We filled some imbalances, right, in these zones over here, and from that we started to see some type of liquid available within the market, right? We started to see some type of upside, right? So if I'm looking at ETH and understanding what happened when we came into this scenario, and I'm looking at the candlesticks, right, understanding candlestick patterns as well as price, what it's telling me as it is moving, right, we can see this move that came into this zone, right? Limits were opened up. Any orders, old orders were mitigated, right? We saw this large move, and it created this sort of doji candle. Now this is showing me on the daily time frame that we're starting to get into that consolidation, right? We're starting to show some liquidity is being introduced within the market. Now we get a move down, very strong, right? Move to the downside, closure on the daily, and then we get a consolidation candle. Now, if I were to go on lower time frames and look at this candle, I would understand this candle as a zone of supply. Now, why we've talked about this before, but we get an accumulation to the distribution. I'm looking at this as a drop-based drop. This area is an area that created supply. Now, this is the most recent strong high to me that caused this new low versus looking at this high. As this high that caused the new low. Yes, this is the most external high that caused that, but on lower time frames, understanding that this drop-based drop and this creation of supply that caused a strong high that brought a new low, and that was immediately violated. We saw a mitigation of that demand zone, right? That higher time frame institutional candle, and from that we saw a run up. Now we did have body closures over these candles over here, and if I'm looking at body closures as far as this goes, as long as we are holding, right, these candles on dailies, not wicking, right, we can wick underneath these candles, but as long as we are holding these candles, closing at these zones, showing still that demand after a liquidity rate as well as higher time frame demand, right, that we have unmitigated within this move. We still have imbalances, right? Yes, you could argue price came in, filled imbalances here, but we must understand this is a higher time frame zone, right? So looking at an hourly or a lower time frame zone, when we go to do some refinement, we can see more structure, more imbalance that is being left behind, more areas where orders were not filled, right, that caused this break of structure internally now within the range. Now we also need to understand, instead of just looking for where we would get entries, what price is doing on the way up and what it is doing on the way down. Now what I mean by this is once price shows that structure break, right, we create some sort of demand, price moves down, we get another structure break, and price starts to move up higher into the range. Price comes up next to previous highs, right, that were created, and creates equal highs, showing me that more buy side liquidity is being introduced into the market. More people are going short at these areas. Now we see another, right, mitigation of demand, another break of structure upside. More demand is created within these consolidation candles, institutional candles, right, from breaks of structures, impulsive moves, and then we get another break of structure. Demand is created within this area, and then we get that move into the higher part of the range. Now if we're looking internally within the range, once this high was made again, we came up and created now more relative equal highs. They don't have to be exactly equal. We just have to understand a general area where many highs are being created, right? We're not seeing a liquidity rate to the downside followed by a bullish or bearish engulfing. Instead, we are seeing price come up, get close to the highs, and then from that start to move off. Now, what does that show, right? That is showing me a lot of shorts are getting into trades because now we've created buy-side liquidity when we came up once. Price came back down, took out previous longs. So now that the longs are out, we are able to introduce demand. We introduce demand, price moves up, takes out previous shorts, mitigates previous supply that was created from this internal high that caused an internal low here. And from that, we saw this move lower into the range. Now that previous shorts were taken out, supply was mitigated, and then from that, we were able to now move. But this move up, right, created more buy-side liquidity. So I'm looking at this as everybody is in shorts right now. Now, this doesn't mean just because everybody's in shorts, right, we're gonna long. We still need to see that behavior coming into these zones that we are looking for, right? We need to see price moving slowly into these zones if this wants to play it out right. Okay, here we go. All right, we need to see price move up, right, and then start to slowly move into the zone, creating liquidity, clean highs, clean lows, right, showing us that there is a lot of shorts getting into these trades right here, giving us an opportunity for that. If one structure break is available, I now have all this liquidity available, right? So now I can see that move and take that move and understand that, okay, this is getting to that point to where it is confirmed because price is getting basically squeezing, right? It is getting to that point to where one structure break, one move is going to bring a structure break, an impulsive move on multiple time frames. So as far as Bitcoin and ETH, right, I'm looking at lower zones around 966. Or if we can sweep liquidity from these lows right here, introduce some demand on the 4 hour now because of this 4 hour change of character or break of structure we have seen from this move right here internally. Overall, like I was saying before on the daily, as long as we are not closing under these with displacement, then I'm not looking for shorts overall unless we create more lows here, right? Show more sell side liquidity versus buy side liquidity, come up, mitigate supply, start to break structure, and then we will play the trend as far as that goes. But personally, right, I'm still long bias and I am looking for that move, that behavior, right? That impulsive move that shows volume, breaks structure, and gives us what we want to see after mitigation of these zones lower here or a liquidation right here, and then another break of structure upside. Same thing goes with Bitcoin. Right, again, we had talked about these clean lows that were being created, right, at these zones of demand down here. Now, if we go to do some refinement, right, we can see where that imbalance was created and see where those moves were and understand where the consolidation was before that move. On now the hourly, institutional candles, right, marking the entire zone, that consolidation before the impulsive move that brought that break of structure of that strong high that caused a new low here. Right, and now we can see that this zone is unmitigated. Yes, it mitigated the higher time frame zone, but like I was saying earlier, right, our higher time frame zones are going to hold lower time frame zones of liquidity. They're going, these wicks that you see, right, are lower time frame zones of some of supply that was created. This is a lower time frame distribution that had played out at this zone of supply. All of these candles, right, the entire story is important to what we are looking for. Now, all of these lows, right, again, like I was talking about, has shown me some type of unhealthy demand on this move up. We came up, liquidated the highs, right, took out all of the previous highs that were in shorts at 21.8, mitigated supply that caused this new low here, and from that we are now seeing a lower move. But if we can still hold these zones, right, liquidate, show some more demand after mitigation, and then break structure upside, then I will look for upside trades. As you guys can see, that behavior that we want to see is very, very similar to price action as to what it is happening here with Bitcoin, right? We are creating clean highs, clean lows. This is very, very clean liquidity that is being created, very, very clean opportunities that are left open within the market. Now, we're going to get into some refinement. We were just talking about some refinement, but we will talk about how you can look at this for you guys, right? And get a better understanding of how you want to comfortably refine, because I get into scenarios where a lot of traders might ask me, oh, why is it not hitting my zone, right? I refined it down to the 15-minute. It looked very, very good. It was very clean. But then a 15-minute zone is hit right after that. And they're like, oh, okay, well, what do I do then? Like, this one hits and this one not hits? Is it just like, is it by chance, or how can I do it, right? So understanding premium and discount and a couple other factors, we can start to get into refinement. So if we get into refinement, if I'm looking at an order block, institutional candle, zone, higher time frame zone, I always start with my supply and demand, right? So my higher time frame supply and demand is going to be that consolidation right before the impulsive move that broke structure. So if we had clean highs and clean lows being created here, we had consolidation, and then we had an impulsive move that broke structure. I would mark this zone, right, that consolidation, as the demand zone within this scenario as price broke structure to the upside. Now, if we want to do some basic refinement and understand where I could possibly be looking for some type of price action within this zone, understanding the fractal nature of the market, as well as our confirmations from time frame to time frame, we can now look for the same exact behavior within price action on lower time frames within these zones. Now, what I mean by this is, one, we can utilize premium and discount. So if this zone was created, right, one, I already understand that we are looking for discount of this impulsive move here. So one, I'm looking to buy in these lower areas. If the imbalance, right, the volume and everything is shown down here in discount, as well as that mitigation and everything, then I can look to take the trade. But if I want to do some refinement of this zone, I can do the same exact logic, right? That same exact theory, premium and discount for here. And now on lower time frames, I'm going to be looking for institutional candles, order blocks, whatever you want to call them, right? After a liquidity rate to the downside, break of structure to the upside, the same exact behavior we were looking for here, I'm now going to be looking for on the lower time frames within these areas to refine. Now, I'll show you guys that within a second when we get into some live charts, but we're just understanding the theory of this right now. When we get into refining, I personally do not play limits, but those who want to play limits, right, they want to set limits, set it, walk away, that's completely fine with you, right? If it works, it works. But they want to get into those areas to where they're going to be able to set a limit and walk away from it, right? So we are going to take a look at that in a second. Go over to gold, and then we will get started. But this chart is the clean chart. Yes, okay. Alright, so we'll do some basic weekly analysis of gold. I don't want to get into it too much because we want to be over here on the right side when we get into the behavior and what we are understanding. We've talked about this before, but this range that we have created, right, on gold, the reason I chose this range is because we have left imbalances behind demand that has not been mitigated within this move that caused a new high. After a liquidity raid, mitigation of demand here, everything is filled over here. I'm leaving orders unfilled here, right? We have that rally-based rally that demands on here that is unmitigated as well. So I see this as the lowest low that caused the highest high. This is the range I have drawn, and this is where we can start to understand where price action can move next. Now, with our range that was created, right, we created a lot of highs on the way down. Structure is still bullish within this point of time, right? We received a break of structure upside here, mitigation of demand of these candles, and then from that we were able to move higher within the range. Utilizing market structure as well as liquidity, as well as our overall bullish structure, we could see this high as a weak high. Now, liquidity was taken out here And then we received a break of structure when price 1 came down and then created a lower high. I will show you on lower time frames where that break of structure occurred and why it occurred. But we'll understand that once this move was put in, that's what created our next range, right? And that's where supply was introduced, and we had that break of structure to the downside. But understanding where I marked my break of structure as a break of structure is very important within this scenario. Now, many don't mark breaks of structure because of certain inside bars, whatever they are looking for. I personally believe that every candle tells a story, and all of this candlestick action holds a purpose. Now, the reasoning for this is you might be able, or you might be looking at lows down here, or even lows down here from a break of structure to the downside to confirm that as a break of structure to the downside. Now, that is more conservative. There's nothing wrong with that, right? But how I'm going to be looking at it as is, we had a liquidation rate to the upside, so to mark this out for you guys, of all of these highs on the weekly time frame. And then following that liquidation rate of those highs, we had an immediate bearish engulfing. That is that introduction, right, that we are looking for as far as algorithms, institutions, price action, right, when we are looking to take a trade. Now, when we got that move up, that following bearish engulfing downside, we had some consolidation within this area. Now, this is where it gets important. That consolidation that we are talking about, this drop, base drop, you have to remember this is a daily time frame. Within this area, supply was introduced. So if I go on lower time frames, it's exactly what we were looking for, right? That accumulation to then distribution and continuation to the downside. So going back to the daily time frame, that consolidation, right, that introduction of supply that caused this new low on the daily time frame right here, broke structure to the downside. Now, why did I mark this as a break of structure to the downside right here? Same theory, same concept applies right here. This supply, this accumulation to the distribution that caused this new low, broke the demand that caused this new high. The distribution to then accumulation, reaccumulation, introduction of demand within this area that caused this new high. This was the most recent low that caused this new high, the most recent demand creation. That supply takes that out, and from that, I see this as a break of structure. Now we have an institutional candle, right, an area of supply that we can look for a possible, right, aggressive entry at this point in time. But this is not where I'm going to be showing the entry. I will show it much farther down the range. Right now, we just need to understand why price action turned bearish, where it did, and where we can possibly look for price to proceed from that, right? So now that we got that break of structure downside and we have those institutional candles, right, that area of supply that was made within this candle here, that consolidation, price creates some more highs, right? So early shorts start getting in trades from this move to the downside, thinking that they caught a top, targeting lows, whatever they are doing, right? What happens, they are liquidated, price mitigates that zone of supply that caused this most recent low that broke this demand zone here, and from that we see that continuation to the downside. Let's go to the weekly time frame, and let's go to replay mode. Now we see that first supply introduction, right? That first institutional introduction at this area. I'm going to go ahead and check stream chat in a second. My fault, but we will get into this once we get this demand zone. But looking at this low here that caused this new high, right? This move out of the range, you could see this as a possible right, break of structure, whatever you're looking at, but we understand supply was introduced here. We see this as a liquidity rate versus that break of structure to the upside, and we could see some possible counter trend action within this area. Now on the weekly, this high caused a new low here. That high is immediately broken here. We have imbalances that are being left here, and we have liquidity underneath as well. So if I'm looking for a certain demand zone, and I'm looking for the start of this impulsive move here, and then once price creates that range, comes back into this zone and or starts to create range here, then I can look for possible trades. Now at this point in time, right, if we were bullish bias, again, we would want to see price creating highs and lows, right, clean highs and lows, taking short liquidity, clean highs and lows, coming into our zone, manipulating longs, right, introducing demand, and from that we will look to trade. But we understand if we play this out, price then creates a range, right? It does not come very slowly or show that exactly what it showed right here, right? That lethargic price action to the downside, creation of equal highs, and breaks of structures to the upside, right? Creation of demand. It is not showing that. Instead, it just comes all the way down into our demand zone very, very quickly, right? So now, we will get into refinement in 1 second here, but at this point in time, right, we see price tap into our zone on the daily. We see that change of character that is put in. Now if we are playing the 4-hour structure at this point in time, we can draw our range from where supply was introduced here, and then look for possible supply, liquidity, any areas within to look to possibly take some trades. Now, on the weekly, right, understanding where supply broke to the downside here, we have supply within this area, but understanding Wyckoff, right, we know this as a distribution that played out, a higher time frame distribution. After a distribution, I am looking for then an accumulation to distribution to mark up the last point of supply, right, the LPSY that we find after the UTAD. And if structure proceeds with that, right, if I see clean lows that are being created, right? Lethargic price action to the upside, no mitigations of demand. We either get one or two and then move, right? And then price just keeps moving to the upside, manipulating highs while leaving lows. Then I will be more short bias, right? Which is going with our overall bias. And then we can look for trades to the downside. Now, understanding the daily time frame, looking for possible areas, right, of supply and demand to mark this out. Now, if we wanted to mark out the entire range, the most previous high that caused a new low, we have one here. Now, if we want to mark out institutional candles within, we definitely can. Now, I see an imbalance that was created right here. I see an institutional candle that was within this zone here as well. If we go to the 12-hour, we can see where liquidity was rated here, supply was introduced, another break of structure to the downside, price came back up, right, mitigated that institutional candle, that lower time frame zone of supply, and then from that had another move to the downside. So within this area, this redistribution, this drop-based drop, right, I'm looking for an area of supply. Again, same exact scenario, right? This is where we receive that break of structure to the downside as demand is introduced here. Price comes up, fills imbalances within this zone, and then we receive that break of structure to the downside from this high that causes a new low. So I have an area of consolidation within here. As my supply zone. Now, if we want to do refinements, right, two areas within, if I'm looking for an area to refine on my supply zone, right, for the 4-hour, I'm looking for the candle before that candle that caused that break of structure to the downside. I have an area of institutional candles within here. But understanding this area as my supply zone, I can go ahead and do some refinement now within this candle. So from the 4, I'll go to the 1. I'm going to play this exactly out, or I'm going to play this out exactly how I go to refine, right? I don't do it from just every time frame to time frame. You'll notice that on all time frames, one area is going to hold some sort of significance. So on the 4-hour time frame, right, this supply zone, that area held that significance of that 4-hour breaker structure to the downside. On the 1 hour, do I see that same type of displacement, right? Institutional candles within that refined candle now. Yes, I do, right? I see a drop-based drop. So another area of supply within this candle here. Now you have an institutional candle. And depending on what time frame I'm looking for, now that we have a higher time frame breaker structure to the downside, but we also have a 4-hour breaker structure to the upside, I understand that price needs to come into this zone, right, and break structure on now the 4-hour as well as the daily from putting in that change of character, right, to continue to the downside at this point in time. So let's draw out this institutional candle. Then let's bring this back. Look where we could have possibly got some type of counter trend longs. Go to the 4-hour. Understand, okay, look, right, on the 4-hour we can see that imbalance that was within this candle as well, right? We see this one area of refinement that we did holds a lot of significance. Now, what do we also notice, right? As price is coming down, we have a lot of clean highs, right? So I can see price coming up all the way into this zone. If we break structure, if we keep showing that, right? If we do not, then I will find more supply within these areas or these areas to look to take price to the downside. But at this point in time, if we can break structure to the upside, then I can see price coming all the way back up into this most recent supply, right? That caused the most recent low. So if we play this out, price raids liquidity to the downside and then breaks structure to the upside, we have an area of consolidation which shows our demand. So I now have demand that was being formed at this point in time, right? If we are looking to take trades. Where can I do now some refinement within this zone, okay? If we're looking for areas that have been mitigated, right? Talking about, let's do premium and discount, and then we will talk about areas that have been mitigated. But if we are looking for those areas, right? And this is why this premium and discount can get very confusing, right, for everyone when trying to pick a certain part or a certain area to trade, because you might see this go down to the 15-minute, even the 1-minute, see institutional candles here, or look for areas, right, down here, whatever it is, what you're looking for to take trades to the upside or set limits, right, on institutional candles, whatever we're looking for. We need to see imbalances that were created, right, as well as breaks of structures upside and some volume. Unfortunately, because of the past data, it won't let me pull up the volume, but this is completely fine because this can be shown within price action. Volume can be used as an aid when it comes to that. Now, we received a 4-hour break of structure upside. If I wanted to do some refinement within these zones, I see, right, an institutional candle here, an institutional candle here. It looked to be mitigated here. This one looked to be mitigated as well, but I didn't see price travel deeper to within this zone, as well as this drop-based drop. This was the most recent rally-based rally that broke this strong high that caused a new low. On lower time frames, we will see this as accumulation to then distribution. Price came up, created more highs, liquidated those highs, then reaccumulated, created demand, and broke structure to the upside. So I now have an institutional candle within my zone. If price can, one, come into this area or even come into this demand zone, break structure on the hourly, and then show me what I want to see, I can look for possible trades. Price then comes up, raids the highs, right? Mitigates this most recent supply that caused this low here. And now that the highs are taken out and the supply is mitigated, we are now able to move into areas of discount. Price then goes into the demand zone, and then from that we receive a break of structure to the upside here. So one, if we were setting limits on this zone, right, trying to do some refinement, setting it at the top of the zone, the 50% of the zone, the top of the candle, however you are looking to risk that, right? I'm not personally one who plays limits. I will play the structure after mitigation, but I will show you exactly where that is going to come from here. So now that we receive a possible break of structure to the upside here, right, I need now my 15-minute to show me the same exact thing. So we understand this demand was mitigated. Right, that hourly break of structure to the upside was seen here. Now I'm looking for, right, again, that introduction of demand after a liquidation raid, right, and to show me that impulsive behavior, exactly what I wanted to see before. Now I see a lot of clean lows that are being created here as well as here. So I could see one, price come into this area, maybe mitigate 1 minute candles, 15-second, whatever it is within this zone, right? Move from there, or two, come out, liquidate these lows, right? And then from there, go. Or three, price liquidated these highs, break structure to the downside with displacement, and then I won't look for long scenarios right now. So one, right, we see price after this 15-minute break of structure to the upside, then mitigate this most recent, right, that consolidation before this move to the upside, come back down into this institutional candle that caused this move, and from that show a higher move out of the range. I'm still looking for that liquidity raid, right, to the downside. So at this point in time, this price action looks to be very, very lethargic, right? Not exactly what you want to see as far as demand goes. We want to see that slow manipulation, right? And then the breaks of structures upside, clean mitigation of demand, and then the continuation from that. What happens? Price comes all the way back down, right? We could have gotten in trades here, whatever it was, right? Looking at this on lower time frames, but we still need to understand that the 15-minute time frame needs to then break structure to the upside and show that demand. So we raid liquidity. Price starts to consolidate, and then we receive a liquidity raid to the downside, and this is where it gets interesting. Now you might say, well, you're waiting for a 15-minute break of structure to the upside. What happened, right? If we are looking at the hourly at this point in time, we saw one, a break of structure upside here, liquidation rate, and then we saw another break of structure upside here and a supply mitigation. So at this point in time, I'm looking at liquidity here, right? As well as imbalances higher within the range. If we can come into this zone, raid liquidity and show that same exact thing. So after coming into this zone, I have seen now two breaks of structures to the upside. I'm going to the 5-minute and understanding structure within this zone. Looking at the 15-minute, right, we didn't really see structure within this zone. Now, let's go back so I can show you what I mean. We had the liquidity, right? The liquidity was then rated. At this point in time, if we're looking for trades, we could either, one, wait for this high to be broken, and then look to take our trade, or wait for another high to cause another low, and then wait for that to be broken. So let's play this out. This high ends up causing a new low. So this would be the next area I would look for. Price then raids that, breaks that structure to the upside. If I'm looking for the consolidation, right, before that impulsive move to the upside, that broke structure. I now have the hourly, right, 15-minute, the 5-minute. At this point in time, we can get into the 1 minute after coming into this area. Right, I want a demand candle that was formed, or if we want to do the entire zone, we can understand it as this. Price then comes into that zone. We are then in trades at that point in time, right? If we're on the 1 minute, I hope it shows the data. It does not show the data, unfortunately. Let's go back to the hourly, and we will use it up to the 5. But that is a little annoying. I was kind of hoping we could show the 1 minute there, but we saw that break of structure upside, right? That creation of demand. We were talking about refinement for supply and demand zones, doing it with the candle before the candle that caused displacement, that caused that imbalance versus the entire consolidation. Right, we saw that liquidity rate upside. We have a demand candle now. We can put our stops underneath that demand candle, and now that I have the 4 all the way to the 1, I am now targeting zones higher. 1, targeting the weak high of the 4 hour to be conservative. This is where I will begin to manage my trade, right? So when we talk about managing trades, and when we get into a trade at this point in time, the most, at this point in time, if you're thinking about what we have done up until this point, if I receive a continuation, right? If I receive a higher low here and another higher high here, price should not come lower. Price should not come lower to these zones based off of the plan, right, that we have set based off of our analysis. Meaning that once price takes out this high, I can set my stops to break even on a relative time frame now. Which is also what I will be using, right, as far as managing trades. So at this point in time, if I receive this new high created here, I would either, 1, take partials, right, set stops to break even, or if I have partials higher, hold to those and set stops to break even once that new high is formed and a higher low is formed, and we get that continuation, right, because that's showing me now exactly what we were looking for, because we have done all of this work all the way up until this point. Price should not come underneath these lows. Now, 1, targeting the 4 hour, right, weak high that was created, or sorry, not weak high. Yes, internal weak high that was possibly created, right? From this move, we have confirmed it with lower time frames. If we are looking for supply zones to target higher within the range, go ahead and bring this to the daily. Trading view is being very, very slow today. Right, we had our supply that we had done all the refinement on. A daily institutional candle, if we go to the 12 hour, we can see the 12 hour liquidity rate to the upside, right? That bearish engulfing to the downside, then following break of structure to the downside, area of imbalance that was created. 8 hour, same exact thing, break of structure to the downside, institutional candle, right? Area of imbalance that was created, clean highs that were created as well. 4 hour, same exact thing. So now that I have it up until that point in time, right, I have supply zones here that I can look to possibly target after this high is taken out here, or I can look to target higher within the range, taking profits at those certain points in time, because I understand from our weekly break of structure to the downside that price could come up, right? Mitigate these zones of supply, completely respect them, break structure to the downside on the daily, and then from that we continue. So we still need to be conservative as far as take profits go. We are now targeting higher within the range. We are within our trade. Let's go back to the 5 minute. And understand what price starts to do. It bounces off of our zone, right? We see another liquidity rate on lower time frames. And this is where the 1 minute trade was entered after this break of structure to the upside internally, and this candle was present here. Let's move this over a little bit. Fortunately, I could not show the 1 because of the data, but we can see again that same exact thing. So we got a break of structure to the 5 minute upside here, okay? We'll show this on a 5 minute candle. We got a break of structure to the upside on the 5 minute here. Price created again equal lows, liquidated those lows, broke structure on the 1 minute, and from that now everything is within harmony, and from that we get that final move, and we should see, right, breaks of structures to the upside and continuation from that. So now we have our target in mind.
We have liquidity as well as imbalance as well as unmitigated supply, right? All an area, all within one area. So now we play this out. Price should still create higher lows, higher highs, and from that continue. If we're watching price action here, price comes up into this area, comes back down, mitigates lower time frame institutional candles. And from that, we get that final move. We're still looking for our area of supply to be mitigated at this point in time. And then if we get that, then daily to then 4 hour, right, hourly break of structure to the downside, then we can look for now the opposite bias. Right, price starts to consolidate. It comes very, very close to our area, taps into our area of supply. We start to see a move from that. If we're on the 4 hour, we might look at this and say, okay, break of structure to the downside, right? Unfortunately, oh no, I can show the volume. I cannot show the volume in replay mode, okay. But anyways, right, at this point in time, you might see this as a displacement break of structure to the downside. We need to understand that we need a daily still because of this daily possible break of structure that was put in right here. So let's go to the 4. Start to play this out. We have our area, right, our supply and our institutional candle that we were looking for. Right, so for those playing limits, looking for something like this at the supply zone or at the middle of the zone. Normally when I play limits, if I play limits, I would just play them at the tops of zones. As far as my refinement goes, now this is a 4 hour, so we can go to the 1, get that same exact candle here. This area of supply, hourly institutional candle. Due to the risk to reward here, right, because if we were on the 4 hour candle, we would be looking at much less risk to reward. Still 7-1, not bad at all, but we'll see how price reacts coming up into these zones. Now price puts in a range, and this is where it gets very interesting because we see these possible breaks of structures to the downside, right? But we understand that this low caused a new high. We have imbalances down here as well, so as long as we respect this, we can still see higher prices. Price then comes up into that area, right? Comes up into that zone, doesn't exactly mitigate that institutional candle on the hourly there. We had the 4 hour marked out. But at this point in time, right, now that the supply has been mitigated, I am looking for now that daily, right, or 4 hour breaks of structures to the downside to show me exactly what I wanted to see. All right, now where would I be targeting at this point in time if I wanted to target, right, for these shorts? So if I'm on lower time frames, right, we understand lots of imbalances were created. If we look for just the most recent move, most recent low that caused the new high, we can understand there are areas in discount that show imbalances, so we can be looking to take profits possibly at these zones or at these zones down here, right? Depending on your risk to reward, how you trade comfortably, how you want to take your profits coming into these areas. But we are looking for, right, 4 hour daily breaks of structures to the downside to show me exactly what I wanted to see. Price then comes down from that. We see that mitigation of that zone. So if we take profits, right, at those zones, price hits that. Very well done, right? We are out of our trade at that point in time. If we are looking for now a 4 hour break of structure to the downside, we receive a possible one here, right, from this low that caused a new high. But we also have areas up in here, right, institutional candles that have been unmitigated if I'm going on the hourly, I can understand areas of supply, right, on lower time frames. 15-minute, right, wait, we can see these candles, as well as imbalances that were formed here. So let me go ahead and get rid of this. From areas right here, right, we saw one mitigation of supply, another low is created. But I'm looking for more displacement because I understand, yes, this was a possible break of structure to the downside here, but this low caused this new high, so I could still possibly see higher prices. From that, right, we get that move up into that zone. So if we were setting limits at this zone at this point in time, I believe price came all the way up to the top of it. Yes, it did violate it. Filled imbalances up here as well. We would have had to hold it over the high. But we saw that liquidation rate to the downside, and then a move to the upside, another liquidation rate of highs, right? Filled more imbalances within these areas, and then following, we saw a break of structure to the downside. Now this is the displacement candle that caused that break of structure to the downside. If I want to look for my supply zone within that, here's my candle before that displacement candle, right? That caused that move to the downside, that break of structure. I now have another area of supply. So now at this point in time, and this is something too when looking at a chart and getting a wrong bias. And what I mean by a wrong bias is a wrong directional bias, so being on the wrong side of the market. At this point in time, right, we got our longs and we saw all the demand that was taken care of within this move right here. We see unmitigated demand right here as well, right, with imbalance. So many people might be looking at this as long opportunity, right? They saw a higher low created here, and they're looking for that same exact scenario, right? A higher low to be formed and then that continuation. But instead, we see more supply introduction, more liquidity raised to the upside, right? And more breaks of structures to the downside. So we are looking for more prices, right? For cheaper prices overall, even though we're in discount, possibly broke structure to the upside, right? Have demand and balance. We are still playing the trend that is continuing to the downside. So we have another supply zone. We have an institutional candle within the supply zone, right? If I was playing limits, let's do some refinement. I have a clean institutional candle, right? Hourly institutional candle that was formed within my supply zone here. If this wants to load for me, here we go. Alright, so if I'm looking at it from this hourly, right, setting a short position at the top of this zone, waiting for price to come mitigate that, because we understand if we wanted to see lower prices, price would come back up into this area and mitigate that. The reason why I don't play limits, right, is because of these scenarios right here where price can raid liquidity to either the upside or the downside and then reverse trend, right, where you might think this is going to go to the upside, but because of the supply introduction after the liquidity raid, right, price ends up showing something completely different. Now we understood this area as an area of demand. Price then comes lower, right, and we see now moves higher up into the range. Price taps into that zone, and this is where it starts to get interesting. So one, if you were in limits, right, then you would have been tapped into your trade here. So I'm going to go ahead and get rid of this now, and then we will understand what price action happened within this zone here. Now, using that same logic I was talking about before, right? Now that we have a 4-hour break of structure to the downside, so this candle closure here, we marked out our supply zone, we found our area, and we looked for possible trades within that. Now that I have a 4-hour break of structure to the downside, I'm looking for a 1-hour break of structure to the downside after mitigation of our zone. So I'm looking for this most recent low, this rally-based rally, because this demand caused this new high here to be broken. right? If we play this out, we see that break. If we look at the candle before that candle, right, we can see this candle here as an area of supply. I also notice institutional candles, right, within this move as well. If I'm going on the 15-minute time frame, right, we can see that supply introduction as well as institutional candles here. I'm going to mark out the hourly institutional candle that was placed here. Because now that we have a mitigation of supply, right, and we have put in another quote-unquote order block institutional candle within this zone here, we have one right here as well, right, if you wanted to mark it all the way out like this, but we will be looking at this institutional candle from a liquidity rate upside following bearish engulfing to the downside. Price then comes up, mitigates our institutional candle, right? We receive a following break of structure to the downside. So 1, we could have been in trades here. 2, we could have been in trades here. 3, we can wait for now the 15 to the 5 to the 1. So at this point in time, right, now that I have received this hourly break of structure to the downside here, and then I get a 15-minute break of structure to the downside here, right? This low that is formed is broken. We see a consolidation candle within this candle right here. So this is an area of supply. If I want to refine this candle, looking within, right, we can see institutional candles within. We see this candle before this displacement candle to the downside. We saw, yes, it was mitigated once. I have an institutional candle here as well within this move. I just understand that at this point in time, if I'm looking for a 5-minute break of structure to the downside, right, after mitigation of that zone, then I can look to possibly take this trade. Price comes into our zone, right, mitigates our zone. For now, in the 5-minute time frame, right, looking for that break of structure to the downside with displacement to show me what I wanted to see, right? I get a break of structure to the downside right here. I now have an institutional candle in place here, but I also understand that this move that caused this possible break of structure to the upside right here, right, could be a possible higher low in place. So if I wanted to get into trades, right, at this point in time, after we've received that break of structure to the downside, from this most recent low that caused a new high, right, the area of consolidation before that, the distribution that had played out, right, within this area, and understanding that price could come down into these zones of imbalances, right? This candle before this caused, or this candle before candle that caused this move right here, right? And still possibly move higher within the range. I need to see more displacement, right? Following a liquidity raid and breaks of structures to the downside to show me that now everything is in place. This is just a change of character at this point, right? This is just internal. Price could come up, create more highs. So we see price come into our zone of demand, right? So if we're taking partials at this point in time, setting our stops to break even, that is perfectly fine. Let's go ahead and remove this. Price then now shows more possible breaks of structures to the downside. We still need to see these lows taken out for that overall 5-minute break of structure to the downside. To show me exactly what I wanted to see. Right, we're seeing price consolidate. Still hasn't taken out the lows yet. And from that, it still moves higher because this low caused a new high. Now this is where it gets interesting because now we receive, right, our break of structure to the downside on the 5-minute time frame. Now, if we're playing this a lot more aggressively versus this low that caused a new high externally, right, we are understanding where supply is being introduced. Now, what I mean by this is, one, we were in trades here, right, targeting lows, targeting these areas first, but understanding where areas have been introduced within these supply zones here, we can see institutional candles that have been put in place, right? All of this is very, very dirty price action to me, right? I want to see the manipulation of highs and then the breaks of structures to the downside to show me that price action, right, that we are looking for. But if we get continuous moves to the downside, right, continuous, again, 15 minutes, 5-minute break of structures to the downside, supply candles that are being created, right, institutional candles that are being formed within these zones, and I see that constant supply being respected, then I'm going to continue to look for trades to the downside. So now that we have seen supply being created within this area, we have areas of imbalance, institutional candles within these zones that we can look to possibly take trades off of. One, if we're setting limits, if I'm setting limits, right, theoretically we would want the highest point of the zone, right, to be able to look to take that trade. But at this point in time, right, I can understand that if price comes into this zone, break structure on the 1 minute or following, then we can receive exactly what we wanted. Now let's play this. Price comes up, mitigates this institutional candle, right, this zone of supply. Comes all the way into our institutional candle that we had here. And then break structure to the downside. So now we receive that displacement, right? We can see that continuation. Minute structure is still bullish at this point in time. We have areas of supply up here that have been unmitigated as well as an institutional candle. Right, another one that has been put in place. Now that we have that set, we understand displacement was put in here, so we have a supply candle that was put in here as well on the lower time frames using the most recent candle before candle that then broke structure, right? Or we can wait for the following move to the downside. If price doesn't tap into our zone, that's completely fine. If it does, it does. Taps into our zone, right? We see a move higher out of our zone. It is rating liquidity at this point in time, right? Now, this is why I don't play limits, right? Because once we come into this zone, I am waiting for the minute structure to break downside, right? To show me exactly what I wanted to see before. One, we could have been over here on this institutional candle, right? Or we could have waited for more confirmation coming into our zone. So we receive another break of structure downside here, right? And then now that the minute has shown me exactly what I wanted to see, I get a displacement, right? Break of structure to the downside right here. I get an area of consolidation that is being shown for my supply. One, I can wait for more displacement, right? Wait for another break of structure to the downside because we saw one here and then price came back up, and then on the seconds rated liquidity to the upside and then broke structure to the downside. Where's your candle before the candle? Here, let's move this back a little bit. Where's your candle before the candle that broke structure to the downside here? This recent low that caused a new high, displacement, and balance is created. Here's your supply candle. And I wish I could bring this to the one for you guys to show you how I ended up getting this on the 1 minute. But at this point in time, right, we can look at the 5 minute, either one entering on this zone, right, or this supply zone, risking here or risking here overall. And then now that we have that confirmation, right, all the way to that point in time, the 4 hour, 1 hour, 15 minute, 5 minute, up until the 1 minute, right, then we can see now what we would believe to be that continuation to then the downside. Now that we have seen all the supply that's being created, you might look at this as longs, but we are looking at this on the other side, right, at this point in time. Price could easily still create that range, right, come higher into these zones, but We are just playing structure, right? We start to see the move. We see a liquidity rate to then the downside. Let's throw this on the 15. We see a liquidity rate to the downside. Price respects the supply, comes back up into these zones, right? Raids liquidity again, mitigates this institutional candle again, then breaks structure to the downside, and then this is where we would be looking for possible trades coming into the future. Now, this is where it can get very aggravating, right? Because we'll get into a trade here, say we have everything, right? And then take our partials, get stopped at break even, and then it shows the complete move from that. Now we need to understand that from all these highs, right, that are being created, equal highs here, as long as we are respecting these highs that cause new lows, then we can still see lower prices overall. Right? We see that liquidity rate upside, and then from that, we get that move to the downside. Now, this is where many will get very confused, right? Not understand what's happening and get frustrated at this point in time because they get that liquidity rate, right? But if we wait till we get the following break of structure to the downside, right, to show us something that we wanted to see on from the 4 hour to the 1 hour time frame, right? Because we saw this as a possible 1 hour break of structure to the downside coming into this zone, right? But we receive a 1 hour break of structure to the downside, right, with these candles over here. They break structure to the downside. Supply is introduced within this institutional candle here. And now, even though we may not been in trades here, or here, right, we understand prices coming down into these zones to fill these orders, could still possibly make a higher move, but we still have opportunities presented to us from here to here at this point in time. And then from that, price comes back up, right? After mitigating that zone of demand that we had talked about, that imbalance, it's rating liquidity. We need to see that higher time frame again, right? Breaks of structures to the downside, exactly what we wanted to see. What do we receive? Break of structure to the downside on the 4 hour right here. Let's bring this back. Right? Many are longing this move because they see a break of structure to the upside, institutional candle demand, they're going, and they're trying to get these longs, but we understand if this low that caused this high is broken, then price will be bearish and is putting in a liquidity rate, right? And we will receive that break of structure to the downside if it is given. Price then gives us that break of structure. I now have a 4 hour institutional candle overall. And the reason why this is a 4 hour institutional candle, right, is because institutional candles is just the introduction of algorithms. That's it. That's all it is, right? It is banks, larger money hedge funds entering positions at these areas where we see those liquidity rates. Now, if I'm looking within this institutional candle, right, I see a large institutional candle that is being put in place, right? I obviously don't want to risk this. So now that I have a 4 hour break of structure to the downside, I can do the same exact thing I was doing before, all the way down to the 1 hour. After price mitigates this zone, let's go to the 1 hour. I want to see that displacement to the downside, breaks the structures to the downside. After mitigation of the zone, price mitigates the zone. We receive then a break of structure to the downside. Another institutional candle is present. Area of supply, right? Consolidation before the impulsive move that caused that break of structure to the downside. So one, setting limits from now the 4 hour to the 1 hour. If we wanted to set it on these zones, we could. Want to see price then come back into this zone, right? Show us that same exact thing, right? It raised liquidity to the upside. We're looking for now that hourly break of structure to the downside. We again get another liquidity rate, right, to the downside. Price then starts to show some strength, right, breaking structure to the upside. And we might say, oh, well, are we breaking structure to the upside? No, we're not, right? This high that caused a new low here caused another break of structure. So we have an area of supply that was created that caused this new low here. We have an institutional candle that was in place here. So I now have another area, right, to look for possible sells if price comes into that, still now targeting that lower time frame, or sorry, that higher time frame overall week low that was in place. What do we see? A redistribution. Price comes and liquidates that low, comes back up into these areas, and then we get that final continuation to then the downside. Now, as far as entries go, this is where it gets interesting. And after this, we'll go ahead and end this because I'm running a little bit over, but it is completely fine. But if we are looking at this, we need a hourly break of structure to the downside, right? After mitigating these zones that cause these new lows here. So candle closures right here, right? I get a candle closure underneath that here, candle before that candle. I see an institutional candle as well within this zone. So if price can come back up and mitigate this zone, then break structure right on the hourly, show me exactly what I needed, then I can look for a possible trade. Right, what do we receive? Exactly what we were looking for. I now have a 4 hour, right, possible zone to look to take trades off of. I need to confirm that now with an hourly lower high that is being put in place. So I have an institutional candle on the hourly. Break of structure to the downside here. Institutional candle in place. Now that I have that full confirmation of that break, right, to the downside here, 4 hour, everything is in place. Once these lows were taken out here, price action is ready for what I believe to continue. Right, targeting our week low, and then overall, understanding our weekly liquidity. So now that we have a weekly break of structure, right, this is kind of bad to show this, but we have liquidity down at these areas from this low that caused a new high overall. I showed you, right, we talked about this liquidity within these areas here, so if we needed to be conservative as far as entries, one, I would look for targets at that week low or an internal demand zone here, and then targeting now that liquidity on higher time frames, zones of unmitigated demand, right? We have zones of unmitigated demand here, as well as a lot of liquidity. So price, we're looking for price to then respect this high, right? After coming into our zone, tapping into our zone, breaking structure to the downside, and then from that we get that final continuation, right? And then from that we see that move. So now that we have had that entire break, right, from that low that caused a new high here, that low is broken, supply is introduced, supply is mitigated, another low is created. We have more supply that is introduced here, right, with our institutional candles. Price comes into that area, breaks structure on the hourly. Now if we wanted to wait for the 15-minute, right, after coming into these zones, or look for areas, right, on the 15-minute for institutional candles, or areas to de-risk, right, as far as looking for a possible trade, then we could wait for one price to come into this area, break structure on lower time frames, right, show us that, then moves to the downside, displacement to the downside. We don't really get that with these, right? We get a change of character that is put in here, institutional candles that are being put in here, and it is very manipulative price action, right? This distribution scenario that is being put in place here. But we understand as long as price is respecting, right, our highs that are causing our new lows, respecting supply, respecting those institutional candles that are causing those moves, then from that we will see that continuation. Now, gold is a very good one to show, right? Because this entire time, there were so many longs getting in trades, right? Understanding that, oh, price is mitigating demand here, 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 right? Trying to get into trades. What happens? They get that continuation, right? Because overall, price action turned bearish, right? We had our weekly to then daily to then 4 hour to then 1 hour to then 15-minute, and now we're at this point in time, right? And now we see that final continuation to the downside. We are looking for those overall lows. And then if we let that play out, we end up getting those lows, right? That area of demand that we had back here that showed, right, all of that imbalance that was left behind, right? Even just looking at it like this, you can understand, okay, there was imbalances left behind here. Okay, there was imbalances left behind here, right? It's very obvious, it sticks out to us. But that is pretty much all I had for you guys today. If there are any questions, anything like that, feel free to unmute your mics, ask me in stream chat real quick, or I believe free chat just added me as well. We'll go ahead and get this question answered. But as I was saying, the stream will be recorded. It will be posted to YouTube for you guys to see. Once that is rendered, it will be done. But remember, as far as Bitcoin and ETH, we need to see that behavior we're looking for, right? That displacement after a liquidity raid, introduction of demand or supply to get that.
Right? About that.
No, you can ask me. That was crazy. Discord just shut down on me.
I was gonna get here, bro.
Hey man, chill, man. You gotta ask Manny. Let's see what they said on free chat real quick.
Time later.
Oh, we're good.
With your Wyckoff sense.
Tesla.
Yeah, I'm looking at the 4 hour and the daily. It kind of looks like accumulation, but it could also be redistribution. But regardless, my price target for it is $800. Definitely go higher than that, but I'm not interested in it. And I'm doing like option flow analysis on it, and I've been noticing that big money has been going in every time. Like if you go to the 4 hour and you just put the lines right there, like the sellers climax and the AI, bro.
Oh yeah.
It's like pure Wyckoff. Same thing with Apple.
Yeah. Very similar. I like this. I mean, as far as higher time frame structure goes, you, to me, are bullish if we can create higher lows right within this area. I like it, right? Manipulation of lows, right? Mitigation of demand that causes a new high. We get clean highs created on the way down, more breaks of structures, more higher lows being created. Yeah, it's clean.
I have. If this thing can get over 816, I swear it'll go to like $900 because there's no institutional flow between 17 and 855. Like the actual institutions buying, because I use my black box.
Got you. I mean, you can. Yeah.
Yeah, my black box has kind of like a volume profile, but they're called dark pool prints. So when we
dark pools,
when you've heard dark pools before because of forex, but when we trade stocks, it's basically the pockets where institutions can go in and put their money without affecting the price. And we don't know if it's a buy or a sell.
Right.
Know that such and such, like right here, I'll give you an example.
There's a bunch of money coming in at this time.
Yeah, somebody bought 79,000 or bought or sold 79,700 shares at $6.95, and they put in another order for 82,000 shares at $6.95.
I see.
A total of 112 million into Tesla without affecting the fucking price.
Right.
G's, bro. Just like, throw it on the table. That's it. So,
no, I like this though.
Those, if we look at the price of where they got it, you know, it's kind of like correlating with the schematics. So I've been looking at it. It's gonna be something that's gonna take a couple days.
Yeah, definitely.
Probably like fucking 2-3 weeks. But when it hits, bro.
Yeah, that's clean.
Like you don't.
That is really clean.
Options contracts, bro. I'll give you an example. You'll take
daily institutional candle as well.
The $2,000 contract will be worth $7,000.
Sheesh. Up at 900? Run me that. I'm walking away for a couple months.
Yeah, if we do it right, it plays out like that because like we know institutions are piling in when people are selling, and these sneaky fucks they can put their orders in and not affect the price. So it's not like forex where they have to like tiptoe in the background. Here they just go bam.
Right, they're just there.
No.
Options, man.
Food for
They
thought,
sound fun.
Yeah.
Now the charts are clean though, man. I was doing some back testing on Apple actually, and it was really, really clean.
I was talking to Lucosis about it, or Ethan. He's like, bro, that's an accumulation scene.
Yeah,
What?
straight up. I'm telling you, it's there.
Mapped it out for me. I'm like, oh shit. I'm like, yo, Apple going to 160.
So with
Go ahead.
no, you're good. I'm just saying, like with stocks, I just treat the gaps as imbalances. It's kind of the same thing.
Yep.
Yeah, just know they're gonna get filled, but they'll trade off them obviously.
There's a couple of other ones that I'll put you on a little bit later, like Boeing. If you look at Boeing, BA on the weekly, it's in like super mega discount. Like,
I'm gonna add this because I have
super
nothing.
mega discount. And these are ones that you could trade on MT4.
Oh yes.
If you want to just like swing it, look at that range.
That's actually nutty.
You're gonna love it.
This is actually nutty.
I think it's
Hold
like
on.
12.
Yeah,
But-
weekly change of character here. You have your consolidation, your institutional candle. Tapped into that. Showed in another weekly change of character on the daily. Break of structure upside here. Areas down here I like as well. Around like 123.14. But if we can keep creating like more demand, like if we get another break of structure.
160 first and then pull back.
Yeah. Yeah, we see something like this. Pull back to either mitigate demand here or come down, take that liquidity and go. I like.
This is another one that you can play. This is heavy in the Dow. This is like, I think it's like 5% of US 30.
I'm gonna run this. All right, so we're looking at BA, Tesla, and Apple.
Yeah, those are the ones that I'm gonna, keep an eye on. Slowly.
Daily. This one, Apple.
Well, I was looking at it on a 4-hour. That's where it looked good to me.
Yeah, the 4-hour. Yeah, the 4-hour looks better than I would say because if I'm looking at the daily, understanding that let's draw the 12. Okay, so this area was an area. So on the 12-hour it broke structure upside. This is where our distribution was put in. So we have supply within this area. So I either see one price coming down to mitigate zones of demand down here. Yeah, and then going from there, creating some more short liquidity if we can here, relative equal highs, and then coming back down into this zone, and from that continuing.
Well, that right there that you just charted is 12% of US.
Sheesh.
So just keep that in the back of your head. When you see US 30 moving, just look at Apple, Tesla, Boeing. That's all you need to do, and it's like, oh shit, they're tanking.
That's how you know. Well, I appreciate it, and I appreciate you guys popping out. I'm gonna go ahead and get off here now. Again, this is recorded, so this will be posted on the YouTube. Any questions or anything like that, feel free to hit DMs at me in Chart Chat, Crypto EDU, wherever you guys are looking for help. I appreciate you guys popping out again. Any feedback is greatly appreciated, and you guys have a great night.
Fortnite. See you later.
Gotta edit, man.
Peace.